Good morning, everybody. Welcome. Good to see you. Thank you for being on time. We are recording this webinar. I'm going to ask you to mute yourselves, and also I'm going to take you off camera unless you can do it yourself. So we just hear from our speakers, and then at the end we'll be able to go into Q&A. Okay? Let me just give it 2 more minutes, and then we'll start. Thank you for being on time. I appreciate all the people who are on time. Let me just put something in the chat also to please mute yourself and take off camera until the end. Okay. All right. Well, I'll just handle the, as people come in, I will just handle the chat. Okay. So welcome everybody. We have been having these webinars all through the pandemic, and I want to thank Aaron and Steve for continuously updating our membership about everything that goes on. And I know it happens so fast, and there's so much, and here we are at the end. So I'm really happy about this. So let me introduce you to Aaron. He's a partner in Aronson LLC Tax Service Group. Aaron is a proactive advocate for his clients, which include restaurants, hotels, food distributors, retail businesses, breweries, real estate owners, professional service providers, startup business owners, and high net worth individuals. Aaron provides tax compliance, tax planning, and other business advisory services to his clients. With 13 years of professional experience, Aaron's clients have benefited from his dedication to excellent service and commitment to being part of Aronson's results-driven tax team that's committed to staying at the forefront of the profession. Next is Stephen Suissa, founder and president of SHS Services. Steve offers your business over 20 years of accounting, planning, and management services. After graduating Ithaca College with a BS in accounting and earning a subsequent MBA from the University of Maryland, Mr. Suissa has served businesses in many capacities, from staff auditor at a local accounting firm to chief financial officer and chief executive officer at a multi-million-dollar national organization. As the principal of SHS Services, Mr. Suissa brings the culmination of his experience to every client, giving businesses like yours unparalleled guidance and service. And next, we have David Hincapie. He's Economic Development Specialist, Veteran Business Development Officer for the Washington Metropolitan Area District Office of the SBA. That is a mouthful. And the people that are on this call, you probably remember Rod Johnson, who was part of our team going forward. So now we have David, and we welcome you. And we're going to do this more like a fireside chat. And I'm going to turn it over to Aaron to talk about tax reform updates, and then Steve for payroll limit updates, then Aaron for employee retention tax credit updates, and then over to David for EIDL loan updates. So save your questions until the end and put them in the chat, and we'll address them at the end of the presentation. So Aaron, let's start with you.
Great. Well, thank you, Margie, for the introductions, and good morning, everybody. And it's great to be back here presenting to the Rockville Chamber. It's great to do another one of these with Steve Suissa and David. It's great to do our first one together. So very excited to be here. Steve and I were, our last presentation was about 6 months ago. And when we were on board about 6 months ago, we gave tax updates. We talked about the retention credit. But when we did the tax update, we gave you a mouthful of things that the government was proposing and increasing. And I'm going to just cut to the chase. A lot of that stuff they were going to propose increasing is tentatively going to be cut, as in they've scaled back a lot of the stuff, which is good news. So really what I'm going to do is I'm going to take a few minutes and go over the highlights of what's being proposed right now. Because as it stands right now, we still don't have any new tax laws. It's currently just a bill, as they, stay in that old 70s, sitcom, I'm just a bill. And, we're going to go over a couple things that are there, so you know what to look forward to. Currently, as it stands, the Build Back, that's a mouthful, Build Back Better Act, triple B, is with the Senate right now for them to mark up and edit and all that stuff. And the way it stands in its current format, there's about 5 or 6 key things that I'm going to highlight for everybody that we should keep on our minds. The first thing, and this has been a really problematic area, for Aronson's clients, for Steve's clients, and really just anybody in the DC metropolitan area, is the state and local tax cap. When Trump put out his tax reform 4 years ago, state and local tax, there was a ceiling of $10,000. In an area where state income taxes are very expensive, that's been very problematic. So what Congress has proposed right now is they want to raise that cap from $10,000 to $80,000, which in summary, what that's going to do is that's going to bring a lot of deductions back to many people starting in 22, if that comes through. So again, just a proposal right now, but that could be actually a positive change that could be coming if that happens. The other thing that's going to be, extended, when the American Rescue Plan Act came out, back in March, what President Biden did was he expanded rather the child tax credits. So basically, if you had a kid under 6, you can get an additional $3,600. If you had a kid between 6 and 17, you can get an extra $3,000. And this was initially intended to be kind of a one-off for 21. Well, what they're proposing right now is they're going to kick this out another year. So that could be another good change if that goes through as well. Another positive thing that's going to come from this bill, if it goes through, is our electric vehicle tax credits. So what they're proposing right now is if you buy something like a Tesla or a Prius, for instance, you could get a refundable credit up to $8,500 if that comes through. Now, I'm not saying you can buy a $500,000 car necessarily, but there's an $80,000 cap on the vehicle that you can purchase. And this is really on vans, SUVs, trucks, and a $55,000 cap on just sedans effectively. And with the electronic vehicles, I can tell you from my experience, sometimes they bring it back, sometimes they take it away. So this is going to be a very nice credit if it comes through. And really what they're trying to do with this is they're trying to entice people to go out and buy these electronic, savvy vehicles, for lack of a better term. So we'll wait and see what happens with that. So that's really all the positive stuff that's coming. So we need to throw out some negative stuff out there. And unfortunately, or fortunately rather, there's not a whole lot though. And just to kind of go back 6 months ago, when we were here 6 months ago, they were talking about increasing the tax brackets, making capital gains rates ordinary, doing away with that 20% business deduction that I mentioned. But a lot of that stuff has been cut. And here's only the handful of negative things that we should be mindful of. And to be frank, it's probably not going to impact a lot of people. The first thing is that there's this concept of the net investment income tax, or what's called the Obamacare tax. When President Obama was in office, he came out with Obamacare and somebody needed to pay for it. And he initiated this thing called the net investment income tax, where if you make over 200K, if you're single, over $250,000, if you're a married couple, they would tack on additional 3.8% tax on any capital gains, interest, dividends, stuff that you're basically passive in. So basically your investment income is the stuff that you're kind of sitting on the sidelines and earning money from it. So one of the things they're proposing is they're going to raise this tax to be applicable to earned income. So what they're saying is that if you're single, you make over 400,000. If you're married and you make over $500,000, this 3.8% tax is going to come into play on all income. Not only your passive income, but also any income from any trade or businesses that you participate in. So if you're self-employed, if you get a K-1 from an S Corp or an LLC, that's going to come into play. And like I said, that's going to still weed out a lot of people, but myself and Steve, we're going to have many clients that are impacted by it, but we're only, worst case, it's a 3.8% surtax that's going to be kicked on when it's all said and done. The other thing that, and this actually may impact a lot of people, is there's this concept of what's called the Backdoor Roth IRA. And what that means in plain English is that, if you make a lot of money, or if you work for a company and you're eligible to participate in a 401k, for instance, at work, what the IRS says is you can't do a Roth IRA. And I personally love Roths, because what Roths do is that you put money in, you don't get the tax deduction today, but this stuff grows tax-free when it's worth a lot of money later in life and you're ready to draw the money out for retirement. So what a lot of people were doing, they were getting savvy, and we were advising clients to do this, is, all right, fund a traditional IRA, don't take a tax deduction for it, and then convert it to Roth the next day before it grows. So that way, that's kind of the workaround from not being able to do a Roth IRA. And then the government got smart and realized, wait a minute, we're losing out on a lot of tax revenue by people getting, doing this workaround. So what the government is proposing right now is the backdoor Roth IRA is going to be cut starting in 2022. And that could really impact a lot of people. So again, these are really the high level things that are coming from this bill. There's some other stuff in there, but these are really impacting the big corporations, the individuals that make over $10 million. But these are really only the handful of things that really going to be applicable for it. So the good news and bad news with this, bad news is I can tell you from our side in public accounting, we've been bracing for this for the last year and a half, advising clients on planning strategies on what could be prospectively coming. And it's kind of a letdown. I hate to say it. That's my selfish answer. But the good news is, as Steve, and Margie mentioned, before we hopped on here, a lot of people are going to get out of this very unscathed, which is really good, as we would say, in the best interest of our clients. So we'll have to wait and see what happens with this. Like I said, just a bill right now. We got to wait and see what the Senate does. We'll probably have an answer around Christmas, and we'll see what happens effectively. That's all we can do. It's just a waiting game right now. So that's what I have on the tax side. So Steve, what's happening in the payroll world?
Well, thanks, Aaron. Very interesting. Actually, I'm sure we're going to have tons of questions on that because even though things haven't changed, they seem like they have a little bit as well. So payroll is actually interesting. For those of you that have employees that run payroll or have your own LLC and you're an S Corp where you are processing payroll, there are a few changes, not anything significant, but enough that makes you pause. So as you know, when you have payroll or you run payroll, there is an employee side to payroll and there is an employer side to the payroll. Employee side are the gross wages, and within those gross wages, right, the payroll company takes the federal, the state withholding, Social Security and Medicare and ends up remitting that to the IRS and to the states. On the employer side, you pay an additional, right, matching Social Security and Medicare. And there is federal unemployment, referred to as FUTA, and state unemployment, referred to as SUTA or SUI, depending on which state you're in. So there are additional components there. And so Social Security has limits and it's taxed 6.2%. For 2021, everything over $142,800 was not taxed on Social Security. They are now raising that limit for 2022 to $147,000. So again, not significant, but you're talking about, $4,000, $5,000 difference there where, it is going to be subject to Social Security tax. With respect to Medicare, Medicare is still going to be taxed at 1.45%. There is no limit. That has not changed. You could make $1 million and you're going to be taxed at 1.45%. They do have and was instituted a few years ago that if you make over $200,000 as an employee, not an employer, but as an employee, you are taxed an additional 0.9% on the earnings over $200,000. That is going to continue. They did not eliminate that. So if you make over 200K, or you are a joint filer that makes over 250K, you are going to be subject to that additional 0.9% on the earnings over those amounts. So that has not changed for 2022. One exciting thing that has changed, though, is the 401k limits. The limits have gone up from 19,500 this year to 20,500 for 2022, which $1,000 extra to help fund your 401k is definitely beneficial. If you're over 50 years old in 2021, you could add an additional $6,000, which is called a catch-up. And that limit has actually not changed for 2022. So that means that at the end of the day, your net effect is about $1,000 more that you can put away in your 401k plan. That's great. If you have a company match, that just means additional money can also go in and help grow that. With respect to traditional IRAs and Roths, again, there are still, well, this is for IRAs, there are phase outs that still exist, and those phase outs haven't changed. And you should definitely speak to your CPA or your payroll company regarding what some of those phase outs are. But they are, and they could be anywhere from 68,000 to 78,000 if you're a single, about 109 to 129 if you're a joint. And if your spouse is covered by another 401k plan, in their company, there are additional phase outs and limits where you cannot contribute. And I know that Aaron touched on that as well. Again, just to reiterate, Social Security is a 6.2% out of your pay. The employer pays a matching percentage of that. Medicare is 1.45. FUTA is 6% on the first $7,000. And SUTA is going to be, actually, SUI is going to be very interesting this year. Last year, we saw a pretty dramatic increase in the unemployment, the state unemployment rates that went up. And those rates can vary anywhere from 0.3% to about 15%. And so we saw last year quite a few clients jump up from a 0.3% or a 1% to a 4, 5, 7%. No notices have been sent out yet by the states as to what unemployment is going to either increase or decrease to. We have no predictions. Last year, it was our understanding that the states were not going to base any increase on 2020 based on what happened in the pandemic. However, they did go back and use 19, 18, and 17 as a basis. And what we saw was pretty much an increase on almost every single client across the board on unemployment for the state. Let's see what happens in 2022. Those should be out in January. They typically send out the notices in January, telling you whether there is an increase or a decrease. So absolutely look out for that. Hopefully we'll have a decrease, but it's important to make sure that your payroll company knows about that increase or decrease, so you don't get socked with penalties if you underpay and have to deal with a refund if you overpay. Refunds right now, or even within the state, are taking quite a bit of time. So with respect to payroll, another topic that's a pretty hot topic that's been on everybody's minds is ERC, the Employee Retention Tax Credit. Aaron, any insight here you can provide on ERC for us?
Yeah, Steve, that's all we've done, I felt like, the last year or so. There's been a lot out there, and it's, there's a lot of money to be had. But I mean, really the one big change that's happened since we spoke here 6 months ago, and we have done a lot of presentations left and right with the chamber, is that ERC is canceled for fourth quarter. Because, to kind of give you a little bit, brief history of this came to life in 2020, then it got extended in the first 2 quarters of 21, then it got extended the second half of 2021. President Biden's infrastructure bill came out in November, and it retroactively canceled ERC to October 1st. So for the moment, it's still out there for 2020. It's still out there for the first 3 quarters of 2021, and it's not too late to claim this thing. And just from a practical, while you should look at 2021 is really where the big bucks are. In all honesty, to qualify in 21, if you had a 20% slippage in revenue in any quarter of 21 compared to that same quarter in 2019, you're eligible for it. And basically, you could get a credit equal to 70% of the first $10,000 of wages per employee per quarter. So let's say if the first 3 quarters of 21 is lousy, and let's just take PPP out of the equation, because you got to be careful that you don't double dip the PPP wages and the retention credit wages. But you could get 7,000 per employee times 3. That's 21 grand, and that is big money right there. And this is really, I've never seen in my 14 years of doing this. I'm up to 14 now, Margie. I know you said 13, but since we last spoke, but no, I've never seen anything this generous that the government has put out. And this is something that should not be taken lightly. And it's a very complicated credit, but it's something that you should definitely look at and talk with a CPA, whether it's me or Steve, somebody else, talk to a professional about this, but definitely take this into consideration. And, and the refunds I will tell you, are taking a while, but they are finally starting to trickle in a little bit. So it's not too late. And if anything, get in line so you can get your money, hopefully sometime next year. So that's really the big takeaway, I would say, with the retention credit. Don't blow it off.
Well, it's important as well, right, Aaron, to note that, I don't want your point to be missed. The waiting time and the processing time for the ERC, the amendments of the 941s, is really taking a long time. I mean, we have clients, I think both of us have clients that applied right in April, right, of this year, and they're either still waiting for their refund or have just gotten in the last few days. So
That
and
is accurate.
that's from a Q1 filing.
I agree. We got clients that did 2020 amendments at the beginning of the year. Like, we're talking January, February, and here we are almost the end of the year, still waiting on the money. It is not quick. I mean, and to be honest, what we have learned with this credit is that it's big dollars here. Usually amendments take longer to process than regular returns. That's just that general rule of thumb with anything you file. And given the dollar values, I think the IRS is looking at this stuff a lot closer. And it's also very important, whether you work with a Steve or an Aaron, anybody else, that this stuff is done accurately, because this stuff, I wouldn't be surprised if it starts getting audited next year, because the government is handing out, we're talking 6, 7 figures to some clients potentially. So, and one of the things that's in Biden's bill right now is that they're going to increase the amount of auditors that the IRS has on the ground to look at this stuff. And typically IRS, when you file a tax return, there's usually a 3-year statute where they can come back within 3 years and say, hey, we want to look at this. We're not happy about it. These credits, I learned recently, it's 5 years, which I've never seen a 5-year statute for something like this. So it's really, you should get in line, start this sooner rather than later. It's not a quick process, but at the same time, though, invest the time, the money to do it right, because, this thing, there's a good shot this thing could be audited given the dollar values we're talking here. So, and speaking of COVID-19 programs, David, I guess I'll hand it off to you. You can give us updates on the EIDL program.
Okay. So EIDL program, it's still going on. It will end on the last day of the year, December 31st. You can still apply if you have not yet applied. And as long as you get the application in before then, it'll be processed. You may not get the loan if it's approved until late January, early February. But you can apply. You can also still apply for reconsideration for anyone who has been declined for some reason. And you can also apply for an increase if you wish to increase the amount that you had were originally lent. You can apply for a second increase if you have not reached the maximum that's allowable of 2 million. So there were some questions before we started the thing. We were chatting about this, about what would stop a person from getting the increase. Okay, so the loan, the maximum possible loan is $2 million. It doesn't mean everybody gets $2 million, just like any kind of business credit. It depends on the ability to repay. So we're judging the ability to repay based on the revenues they had, the business owner had before the pandemic. So there was an arbitrary cap of $150,000 for most of last year, or for all of last year, once we started the EIDL program, because the pot of money was running out very fast. Some people were qualified, right, based on their business revenue and their liabilities that they had outstanding. They had the ability to repay a $1 million loan, but they weren't going to get it. They were going to get a maximum of $150,000. That was the cap. Some people were qualified. That means they had the ability to repay a $75,000 loan. Well, the cap was $150,000, so they got the $75,000 loan. Now we've raised the cap. We raised the cap up to $500,000 and then went back to the original $2 million. So you can apply for a reconsideration. Some people have applied and it's been declined. I don't know everybody's details, but I'd be willing to bet money that they've been declined because they don't have the ability to repay a higher amount. It's that simple. If you got under the $150,000 cap the first time, that's what they judged you have the ability to repay. We understand the pandemic has gone on and the revenues might still be low and you still need more, but that is the limit that they've imposed, right? They said you qualify for 75,000. You're not going to get more. If you got a loan that was 150,000, well, you should apply for an increase because it could be that you were qualified for more, but there was the cap in place. Now the cap is not in place, so you might get more. The requirements are going to be more information than were required for the first time, right? For the first time, all we asked was your gross revenues in 2019 and your cost of goods sold, right? That was it. That was the only financial information, the easiest commercial loan ever made, as far as the application anyway. Now they're going to require taxes from the previous 3 years, from 2019, 2018, and 2017. They're going to want to see a schedule of liabilities, and they're going to judge this ability to repay. It's going to be a little bit more the way a commercial loan you would expect it to be, a little bit more financial information. All of that you can do by going into your portal where you did the first idle and hitting the button to request an increase. Now, there has been a technical glitch. It seems random, where some people go into their portal and the button's not working. It's not activated. We don't know. They haven't been able to figure out why. In that case, you can just send your increase request directly to the PDC the way we were doing it before we added that feature, which apparently is a buggy feature of doing it directly in the portal. So the way to do that is to use the increase request packet that I have. I'll send it to Margie and she can send it out to everybody who requests it. I'll also put my email address here in the chat so everybody has it. If you have questions, specific questions about your idle, if it's stuck, if you've been waiting for information, if you can't figure out what's going on, get in touch with me and I'll be able to look it up and see what's going on. So there's my email address for everyone. And I will send Margie also the increase request packet. The packet essentially has all the forms that you would normally just do in the portal. Here I have the forms, so you can send them directly to the PDC, the primary disbursement center, which is who process the SBA center that processes all of this. So that's the update. Every now and then I get some questions. Will this ever, I still get questions. Will legislation be passed to make the idle a forgivable loan like PPP? I wouldn't bet on it. I'm still waiting to get my student loans forgiven, as we all are. That's unlikely to happen. Other questions are, will they extend idle even more? I don't know. It's see what Congress wants to do, wants to try to do. I don't know. It'd be nice because I think there are a lot of businesses that still need it, but it's going to end on December 31st. That's what we know right now. That's what's in place right now. That's really all the updates I have.
Okay, excellent. Thank you so much for this information. We have questions in the chat. So if anyone wants to unmute yourself and come back on camera, we'd love to see you and hear from you. I will start with the questions in the chat first, and we can put it on gallery view so everybody can see each other. Okay, so the first one is for Aaron. Can you please provide a list of the positives for taxes that you just mentioned? She didn't have a chance to write them all down.
That's sure. Yeah, we'll go brief summary. State and local taxes, currently a $10,000 ceiling. That's going to be bumped up to 80 grand if it goes through. That's going to be a big game changer, for people in this area. The expanded child tax credit under the American Rescue Plan Act is going to be extended into 22 as opposed to being a one and done in 21. Electronic vehicle tax credit is going to be back at $8,500 potentially. And I think best of all is all the increases that we were concerned about 6 months ago, the estate tax being lowered, capital gains rates being ordinary, brackets going up. A lot of the stuff that was going to be increased is potentially off the table potentially. So I think that's really the highlights of the positives to look forward to.
Hey, Aaron, with respect to the child credit, are there income limits regarding that?
They are, yeah. I don't have them off the top of my head, but I think those income limits, I'd like to say they were in the $400,000 to $500,000 range, give or take, I would say. So it's going to be inclusive of a lot of people in general.
Those are refunds or advances that are coming in a check form directly to people's homes, correct?
That's correct. Yeah. And they're starting to get checks. And the key thing, and you bring this up, those are refundable credits, which what that means is that you could owe $0 of tax. You still get this child tax credit to you.
Is that taxable or not taxable?
Not taxable, not taxable. Free money.
Great.
Okay, David, how can the idle funds be used? Can you pay back personal debts with these funds? Can you fund 401k plans? Repay 401k loans? What documentation needs to be kept? And is SBA doing the idle audits?
No, you can't fund your 401k. Oh, man, that's a funny one. I've not heard that one before. No, you can't fund your 401k because the EIDL is a working capital loan designed to offset losses from an economic injury. It's not designed to replace profits, right? Presumably, a business owner, say a single member LLC, is funding some kind of 401k or funding something for retirement out of profits, right? Or maybe pre-tax in the right using, according to the rules, but you can't use this to fund your 401k. Now you could use it for the operating costs and operating expenses of the business that you're not able to pay because of reductions in revenue because of the pandemic. This can include debt, non-federal debt, but it can include debt that you have. So if there is a business credit card, you have a business American Express, if you have an outstanding other loan, another working capital loan that you have, some mortgage for the business, for the premises of the business, if you have such a thing, you can use it for all that, right? You can't use it for federal debt. In other words, to pay off a 7A loan that you have. I mean, it's unlikely it would be enough to pay off a 7A loan. But you can use it for the monthly payments, right? You can't use it to refinance. You can't use it to pay the whole thing off, but you can use it for the monthly payments, right? Those are one of the operating costs, right? The monthly costs that you have in the business. So that's what you can use the loan for. You can use it for payroll. You can use it for inventory. You can use it for all these things that you can no longer pay for, that you have difficulty paying for as a result of the pandemic. That's what it's for.
And what documentation needs to be kept?
Regarding what? Like what they use it to pay for?
Yeah.
I'm gonna look, just keep whatever documentation you would normally keep for a business. It's that simple, right? Did you use it to pay for some inventory? Well, I don't know, presumably there'll be a purchase order and you'll have some sort of receipt when you pay it, and keep that. You were gonna keep that anyway for taxes, so just keep that.
And then is the SBA doing the idle audits?
What do they mean idle audit?
Not sure.
Well,
You
if they
wanna-
mean, are they gonna go around checking everybody? All right, so let's have the principled answer. The principled answer is don't do something wrong, right? Follow the rules. Now let's have the realistic answer. We don't have 10,000 auditors to send out and start sniffing around everybody's idle. I learned I learned in the Army, what's integrity? Doing the right thing when nobody's looking. So there you go.
And David, that's not to say that there won't be random audits though, correct?
Correct. Yeah. I mean, I'm not going to bet my business and livelihood, right, on I don't know, on something like this. So yeah, don't do it.
I think it's important to note as well that, if you do end up, for example, getting audited on ERC, that doesn't mean that it's limited to ERC, right? Once you go down that path, they're able to really audit your business and your records across the board. So they're going to see what funds were used and where they went.
And if you do get caught, I mean, it's just not a good place to be in, because we have a daily internal email that is a kind of compendium of news stories of SBA in the news, right? From around the country. And for over a year, every single, it's called Bulletin Intelligence. It's a daily email that, we just get every single day for over a year. There's a story in there about somebody getting caught on PPP or idle fraud every day. So yeah.
I remember when it first came out, people were using, well, some of them were doing the right thing and sending back the money that got it, by accident, right?
Yeah.
And then other people were using the money to fund another business. That was crazy stuff going on.
Yeah.
Anyway, I'm going to open it up to the floor now. Aaron had put his contact information in the chat, and so did Stephen, and David put his email in the chat. So you can go to those three little dots if you want, and you could say save chat, and that way it'll save to your desktop so you can keep these addresses. I'm going to open it up. So anybody want to unmute yourself, and you can come back on video if you'd like and ask questions. This is our last webinar for the year on these topics. So now's your chance. Don't be shy.
One thing I'll add regarding getting in touch with me directly, if you have a question about anything regarding your EIDL, put your application number in the subject line. Always put the application number in the subject line. That just makes it easier for me to get the number, go into the system, look up some stuff, and then respond to you.
And if Margie, I can add just from a payroll perspective, we are in December. This is the time to make sure you're checking in with your CPA, right? 2% being added to your W-2, health insurance costs, your automobile has to be added to your W-2. And that means you need to contact your payroll company prior to the end of the year and prior to January. It needs to be run with your payroll, your last payroll or your second to last payroll in December. So be real mindful, reach out to your CPA again this year, even though we think that some things have not changed. I'm sure there are some nuances that folks are forgetting, and because they only happen once a year. So it's important to pay attention to those emails that are coming from your CPAs, coming from the SBA, coming from your payroll company, and making sure that you're double checking. One thing to also keep in mind is employees, names, address, social security numbers. Check that before you get to the end of the year. It's always surprises me the number of folks that never check, right, their address, or never check their deductions, or never check, their exemptions, or their even social security number at the end, before the end of the year. And so just do that. Make sure your pay is correct. Make sure all that information is right so that you don't have any issues, because that's going to be one of the, we suspect, one of the triggering factors, right? Amendments, changes, those are going to trigger questions from the IRS and the states.
Just to piggyback off what Steve said, end of the year, just talk to your tax accountant. It's end of the year. Is there anything I need to be aware of? We do check-ins with our clients every year in fourth quarter, whether we do year-end planning for them or not. You just don't want to be blindsided come tax time. 21 is a big different year compared to 20. You got all these COVID-19 programs that are out there. Some impact taxes, some don't. Just know what could be out there. It's amazing how much I learn, this time of year when I do the year-end check-ins, and clients say, "Oh, I forgot to mention this. We moved. Oh, I sold a business. What does this mean?" Just talk to your accountant if they haven't reached out to you already. No surprises.
Okay, I have to ask this other question because I don't know if we brought this up during this live or if it was before when we were talking, but I know the employee retention tax credit is taking 18 to 30 weeks for refunds. I don't know. Do you want to just talk about that real quick?
Yeah, it's slow. Let's put it this way. It's not a quick process. We've got clients, and Steve can attest to this too. We've got clients that have filed for this stuff at the beginning of the year. Some are starting to slowly get their refunds. Some are still waiting for it. And as I tell people when I talk with clients and prospects that are looking to do this, brace for at least 6 months, possibly a little bit longer, because the IRS is still playing catch up from the pandemic. Also, with these being amendments and big dollars at stake, the IRS is taking their time and they're being a little bit more nitpicky about looking this stuff before they issue the big checks.
And it's important to have all of your backup documentation. You would be shocked at the number of folks that I've just business owners that I've spoken to that just amended their 941 without even doing all of the calculations and the backup. And you've got to have those documents. You've got to have the backup to show what you've done. So, when you get audited, you have that proof and you're not scrambling, right, 2 years from now to figure out or remember what you did.
Mm-hmm.
It's important to have.
Stephen, you had a great worksheet at one point that you shared with everybody. Didn't you?
That was for PPP.
Oh, yeah. Okay.
Yep, that was for PPP, and we helped a lot of folks track the PPP and get forgiveness. We're happy to say that every single client that we've had, that we've helped, has gotten forgiveness on PPP. EIDL is going to be a little different. We are amending, not EIDL, ERC. We are amending a lot of 941s, and we are creating a lot of spreadsheets on the back end for us to show and prove all of the amounts that we're using, are deductible, amendable, and removing PPP out of that equation. So it's a lot of work.
It is on top of what everybody does. The last 2 years has been tremendous amount of work that all of you have done on top of your regular job. So I thank you, and I thank you so much for being on this series with us and informing our members of the latest things. Okay, anybody else have anything? Otherwise, I'll let you out early for lunch. Any other questions or having seen none? Okay. Well, thank you all. I wish, if I don't see you, I wish you all a happy holiday. And thank you so much for being part of our series here.
Thank you, Margie, for putting
Yep.
this together.
Yep. Thank you as always.